This is The Bottom Line, a show designed to help Australian businesses succeed. On the show, you'll hear from leading Australian business owners as they share the lessons they've learned building their companies. You'll learn from their successes as well as some of the challenges they faced along the way. We also talk to experts from a range of fields who share specialised techniques you can use to improve your business. I'm your host, Savan Tuna, and I'm a director at Alexander Spencer, and I'm really passionate about helping Australian businesses succeed. R&D tax incentives are a powerful but often overlooked way for Australian businesses to unlock funding and fuel innovation. But what really qualifies as R&D? Who's eligible to claim? And how can you ensure your application not only complies, but also maximises your entitlement? Joining us today is Anders Landberg, R&D Tax Incentive Specialist at AHL Advisory, a firm dedicated to R&D strategy, eligibility assessments, audit support, and international compliance. In this episode, we unpack how companies become eligible for the R&D tax incentive, explore why documentation matters, highlight the risks of relying on general advisors, and hear from Anders his practical tips for staying compliant. Let's dive in. Anders, thank you so much for joining me on The Bottom Line.
Thanks, Savan, and thanks for having me. First time.
First time. It's exciting to have first-time podcasters. Hopefully you get the bug and you do many more of these. So let's get right into it. Anders, I've known you for a little while. We met when we were working on a mutual client. You were at KPMG at the time, I believe, doing some R&D work for one of our clients. But you've had an interesting journey. You have an interesting name and an interesting accent. So tell us about Anders and where you came from and where you are now.
It's always an interesting icebreaker, and I actually use it. It's being used on me as an icebreaker a lot because you see my name and it's very Scandinavian. It is a Scandinavian name, Anders. And then people immediately ask, oh, are you Swedish or are you Norwegian? And, you're right on the money there, right? But then I start talking and the thick Germanic accent comes through, right? And then people just get very confused. Anyway, and then we have a conversation about where I come from, and born and raised in Norway, moved to Germany as a young fella, and then about 20 years ago came to Australia, and now I'm here.
Did you do your university here in Australia, or did you do your university back in Germany?
Uni was here. So I came as your classic international student, right? With the best set plans to do an undergrad degree. I studied computer science out in Bandura at La Trobe Uni, and then go back to the homeland and continue the journey from there, right? Of course, those plans changed, and I'm still here 20 years later. There you go.
And did you find an Australian wife? Do you have these little Aussie kids that play Auskick and all of that stuff?
So my wife is originally from China. She has the same story, also came to Australia as an international student, studied the same thing as me. The typical university romance, right? We've got one daughter, just started high school now, and we both had the same original plans, but they both changed for both of us.
Amazing. I met you when you were at KPMG as an R&D specialist. Tell us how you ended up at KPMG, because I don't know that journey from when I obviously met you that point in time. So you finished uni. You said you did computer science. So how the hell did you get to KPMG doing R&D? How did that happen?
Already early on, when I was still a young fella, I knew I always wanted to do something with technology and computers and IT, and I loved programming. And that led me to studying computer science. And after, uni, I started, your traditional job as a software developer. Actually, what I wanted to add as well is while I was at uni, I had a really good time at uni. I probably spent a lot more time than most others. I went on to do honors and a research thesis, and I did a PhD, which I did alongside one of my first jobs. Anyway, as you do, you start your career, you always look out what else is there out there in terms of, what other things could I do with my skills. And I stumbled across this role that they were advertising at the time at KPMG, R&D Tax Incentives. And I didn't really know what it was about, but I sort of literally fell backwards and interviewed, went through the process and got the job. They were looking for people who understood software, IT, who were able to talk to clients and who were also, willing to challenge themselves and learn something new. For me, that was the whole accounting and legal skill set as well. So sort of started there and without knowing much about what it initially was, and then spent 11 years at the firm and just got massive exposure. And a couple of years ago, started off on my own.
And what level did you get to at KPMG? So how high on the pecking order were you before you went out on your own?
I was a senior manager. So there are, you know how it works. We start with, or at the time I was there anyway, they start with consultant, senior consultant, manager, senior manager, and then there is the director and partner levels.
And what made you go into your own business? Our audience are small business owners. So you jumped ship in the sense that you went from KPMG to start your own consultancy firm. What was that journey like? Tell us a little about of the move to being an entrepreneur and then your own business owner.
COVID had a big thing to do with it because during COVID, we were working from home, and I probably also felt like there was a lot more time to also reflect on what I actually wanted to do, what I liked, and where I just wanted to focus more on. And when you've spent a lot of time in the same firm, I had developed certain ways of how I think things would work best for different type of clients, especially the small and medium type clients, and especially in the startup, but then also in the sort of software space. And I had come up with all these approaches, and I thought, if I just had more free reins, I could help these guys a lot better. And because I also had this time to self-reflect during those years, I thought, why not just give it a crack, right? And that was it. And it was also interesting because, I had a lot of friends and very close clients or previous clients, and that became friends. And after I left the firm, they were actually saying, man, good on you, you've done the right thing. And 5 years later now, I think, so far it's been the right thing.
Yeah, we love working with you, Anders. Now, you are specializing R&D. So your consultancy firm is predominantly providing R&D tax advice to small businesses that may be eligible, want to get into looking at doing R&D or already are doing R&D. But for our listeners out there that are small business owners, not all of them are doing sort of innovative work. And I'd love for you to sort of dive into what R&D generally is. Why did the government introduce R&D tax incentives? Give us a bit of an overview what R&D is and how does it work in Australia?
Let me answer both of those things. So what is the program about? And then how does it actually apply to business? So generally speaking, out of the book, R&D Tax Incentive, it's largely considered the government's flagship program for funding and rewarding companies for doing research and development and innovative work in an area of science, technology, or engineering. It's an extremely established program. It's been around since the mid-'80s. It's gone through a number of reincarnations, but ultimately the policy intent is there to make Australian businesses more competitive at a global scale, really reward them for that R&D. And also because it applies to pretty much all companies in all industries and pretty much all projects, the barrier to entry is very low and it's extremely broad as well. It can be a double-edged sword, and we can chat about that later as well.
Yes, definitely.
But that's the beauty of the program, right? Now, how does it apply? In very simple terms, there are two key factors that make an R&D project R&D for this program. And I sometimes describe them as the wow factor and the headache factor. Don't quote me on that. This is not the regulation you want to take to the ATO. But you look at it this way, right? R&D projects are projects that generate new technological knowledge where the outcome of the activity or the project is unknown at the start. That's the headache. And that require you to go through a scientific method, through a structured way of solving the problems. So there has to be a wow factor in the sense that we're developing something new in the technological sense, something that companies would be proud of going out on the street and saying, we're developing this new jig, this new product, this new device, and it's superior. And here are the reasons for why, the wow factor. The headache factor is companies need to demonstrate that they've gone through a process of often agony and heartache and pain to get there. Why? Because it's not easy. It's hard. And they have to go through this process of experimenting with different approaches, right? Where we find these type of projects, that's basically when we can start having a conversation about R&D for companies.
And can you give us a bit of an example of what some of those projects are? Some of the common ones, so the ones that really not low-hanging fruit, but something like the really ones that are really common, and then the ones that are so not common that our audience may not even thought of it being R&D.
Let's take the software space as an example. A lot of companies are developing software products, for example, and new applications on new systems for their customers, right? And the question is always, is it what we are doing R&D, right? Because there are already, for example, point of sale systems or systems for reward type of systems or those type of applications.
So what I wanted to ask for more was just to give a bit of a feel for the type of activities. So you could use an example. So what are some of the common applications you've done that the audience can go, oh yeah, that makes sense. They built a robot, that's R&D. And something that's just a little bit left field. It could be something that you've actually won for a client that is, you wouldn't necessarily think it's R&D, but then it actually is because of these reasons. So just a common example of R&D so the audience can get a feel for what the program is in a practical sense.
I mean, I'll give an example, and this is some time ago, but it sort of highlights what I would call almost like a no-brainer R&D project. So early in my career, one of my key accounts at KPMG was Qantas, the airline. And it was sort of around the early 2010s, 11s, they were developing this next generation check-in system, which is basically what we all use when we go and fly now, where you tap in and you put your suitcase on the scale and it just automatically does everything.
Yeah,
right?
I love that. It's
Absolutely.
so good.
Now imagine writing that up as an R&D consultant. So that's what I was doing, right? Yeah. And they were dealing with all sorts of different technical challenges from, writing the firmware, building the hardware, to testing different sensors to actually sense, scan the cards, to sense the weight of the suitcase, the size of it, the dimension, whether it actually sits on the conveyor belt, and everything else, right? So fairly straightforward in terms of understanding, yes, R&D, right? But then there is also a lot of companies out there where they are saying, we're developing a new point of sale system for our customers, right? There are a gazillion point of sale systems out there. Why is ours different? We don't think that's R&D. It's just another POS system, right? But that's when we then start to scratch under the surface and also really go back to those fundamental principles and eligibility requirements, Ivan, right? And that's where we really drill down on, all right, tell me about why your product is so successful in the market. Why do people buy it? Oh, it's got these and these and these and these features. And I said, well, don't the other ones have that? Not all of them. We've got some special sauce. All right, tell me more about that, right? Was that really easy to come up with, or how did you go about it? No, we actually failed 10 times until we got to this feature that allowed them to do these things that we didn't have before. Maybe it was, integrating with some legacy printers to actually allow small business owners to run a POS system without having to replace all the printing and all the displays in their shop, for example, right? But then integrating with all these legacy printers and devices is hard. Failed 10 times. So through that course of questioning and really drilling down on the details, we often find these little nuggets of R&D. Sometimes they even become bigger, and helping also then business owners to understand what we're doing, or some of the stuff that we're doing is actually R&D, and we should take use of the program.
Well, let's dive into the program. So let's assume we've got a program, or we're doing some R&D activities. Take us through how the claim system works, the application process, the costs that were incurred by the company, and how does that all play out, and just explain through the cycle of the process of the application and so on.
The first thing that is important to understand with the R&D program, and I'm having this conversation a lot with accountants like yourself and also with business owners, is that one thing that makes the R&D tax incentive a little bit different from other programs is it's administered by two separate government bodies. The ATO, that really looks after the expenditure and the benefit claimed by the company, and Industry, which is a government body that primarily focuses on administering and assessing the technical eligibility of the activities that the company is claiming. So an R&D claim is really composed of 3 layers of eligibility. First, you look at the eligibility of the company itself. Is the company entity as such – eligible to make an R&D claim, to register for the program? Once we have established that, we look at the technical eligibility of the activities, of the actual work that is being undertaken. There's a big bulk of the job of an R&D advisor is to, number one, educate the clients on these rules and eligibility requirements, and then understand what the client is doing, and then map the work against these requirements and making sure that they are well supported. That's what we call the eligibility and scoping activities, to work out what is the scope of your R&D activities. That's a big part. And then the third aspect of eligibility is expenditure eligibility. And that is exactly what you mentioned, What types of costs can companies claim? Salaries, contractors, there's a couple of overheads. And then there's a whole bunch of other hidden costs that companies are traditionally maybe not that aware of, that we can find out through the right understanding and questioning. Overlaying all this is a whole bunch of other additional, what I would call the sort of sometimes the hidden rocks under the surface that are not the most obvious eligibility requirements, at-risk rules, feedstock rules. There's a whole bunch of them that are difficult to understand. They are sometimes even difficult to identify. But I always say companies want to talk to a specialist to actually make sure that they cover off on it all.
And when you go through the eligibility process, so you make an application to AusIndustry, is it a 50-page form? Is it a very basic process? Obviously, you need an R&D specialist to support you in that. Take us through how complex that really is.
Let me actually talk in a nutshell. So let's say you were the R&D client. You're my client now, and I'm the advisor. And the first thing that's going to happen is we're going to get you set up on the R&D customer portal. It's a couple of onboarding activities that need to take place. It takes time, right? That's the first step. Then I will ask you a whole bunch of things. Sivan, tell me a little bit about what you're developing within the financial year. What were your challenges and so forth, right? What documentation have you got to back it all up? And I will prepare a report, an R&D project description. It's usually like a 5 to 10 page technical report. Sometimes there are multiple reports depending on the size of the business, how many projects and activities there are. But fundamentally, it all boils down into these R&D project descriptions. And I will also work with your accountant or with your accounting team to actually collect information about the costs that you've incurred. And I will develop a cost model that reflects the costs that relate to the activities. The R&D project description then goes into the R&D application form, which gets lodged with AusIndustry. AusIndustry then does a high-level review, not a very detailed review, but they do a high-level review to make sure that companies have addressed the key eligibility requirements, that the forms are complete, that they generally get the feeling that companies have understood what is required to make an R&D claim. They then issue a registration number, which is effectively a number that unlocks the R&D benefit through another deliverable called the R&D tax schedule, which is what combines all the costs that you can claim, which go into your tax return.
And you mentioned that AusIndustry do a high-level technical review of that document. Does that mean that at that point in time, if you've completed the form accurately, you've demonstrated that the project is eligible using your words, assuming you could even put some drawings in there and some technical information, do they, I wouldn't say rubber stamp it, but the word high level, as long as you do that part right and explain it in the right way, that it's pretty much guaranteed that not guaranteed, but you'd get that across the line?
Just before I answer that, just one more thing on the attachments, right? Under the old R&D application process, you were actually able to attach attachments, pictures, drawings, diagrams, and other written documents to the application. A couple of years ago, when they moved to this new R&D customer portal online, fantastic, but all that went away.
Oh, no. So it's even harder to demonstrate it to a degree, right?
Yeah. You've now got not the ability to do attachments, and all the responses that you put into the application are limited by characters. So it becomes even harder because you have limited amount of space to actually mount your arguments of why is this eligible? Why is it R&D? Some of the sections where you need to justify the eligibility are actually quite short. They're quite small. So it's really, it takes a lot of practice and experience to say, well, what is really important and what is the stuff that we can leave out? And where do we draw the line in the sand, right?
All right, let's take it through. We've spent $200,000-$300,000 on eligible R&D. We've got our R&D number. We're ready to lodge the return. What are the benefits? So we spent, let's use an example, $300,000. You've done the tax schedule. Can you take us through what are the tangible benefits that a company gets in terms of money in their pocket?
Yeah, no, absolutely. And look, it's important. And that's why companies are doing it, right? So the R&D incentive, it essentially provides two tiers of benefit. And the tiers are determined by the aggregated turnover of the company. So there are, let's call it the large companies who turn over 20 million or more in aggregate as a group, and everybody else below 20 million. The companies that are above 20 million, so larger companies, they get a 38.5% non-refundable R&D tax offset, which essentially boils down to an 8.5% permanent tax savings. So the way I often explain it to companies is, well, if you invest, I'm going to use $1 million now because it's easier to do the math. $1 million in R&D, your tax saving is $85,000. $85,000, you can hire a new apprentice, or you can buy a new machine, or you can repair something.
And that's because they would ordinarily get 30% tax deduction for the original $1 million they spent, but the government's saying, well, on that $1 million, we'll give you another 8.5% over and above the 30 that you already get. So the permanent difference and financial benefit is, on that example, $85,000. And what about the smaller clients? So let's take it, probably the ones that are predominantly listening to this podcast. How does it work for them?
That's where things get really interesting. And I think that's also why the program is so popular. Like, just to take a step back, every year, more than 11 or even 12,000 companies claim the R&D tax incentive. It's huge. And one key reason is because of, the broadness of the application, but also because of this 43.5% refundable R&D tax offset, which applies to the smaller guys, to the companies with an aggregated turnover of less than 20 million. What makes it specifically interesting for these companies is that, let's play out some scenarios where they are turning a profit, very profitable business. A lot of even smaller companies, they've been in business for a long time. They are very profitable. They're paying a lot of tax. The 43.5%, and their tax rate will be, let's assume 25%. Their permanent tax saving, which comes as a tax credit, is still 18.5%. The way I then often explain it to people is, think about getting a 20% discount on some of your investment. It's great. It's really good. Then we have companies that are in a tax loss position, and they can get up to 43.5% as a cash refund of their investments. So a typical example, let's say you have a startup, they've attracted some investment, and they are pre-revenue, and they spend $1 million on R&D, they can get up to $435,000 cash back.
Wow.
Very often, this is like a lifeline to just keep businesses going.
What I wanted to ask you was, obviously there's these technology, software, AI, lots of stuff going on, but is one of the key criteria that the product that you develop has to be sellable in the market? Or can you build something that is unique, it's R&D, it's a robot, but you use it internally in your business? And is there a distinction between the two in terms of how R&D tax benefits work?
There has to be an intent to generate revenue, or there has to be a path to generate revenue through the development or through the undertaking of the R&D activities. That's really important. And that needs to be documented. Now, in terms of the types of activities, there is a special rule that applies to software, and you might have even come across it. And I think you're playing on this one, Simon. What I would colloquially call it the internal business administration exclusion rule. Basically, what it means is that if a company develops software that will be just used for internal administration purposes, like let's say you develop your own payroll system or your own HR system or an ERP system that will only be used internally by your company to keep the machinery running, it can't be claimed as R&D. In fact, it can't be claimed as a core R&D activity, which is one of the key sort of technical concepts within the R&D eligibility framework. It may still qualify as a support activity, which has a slightly different set of eligibility requirements, but there are additional rules that apply to make it still claimable. But the general rule, when I speak to clients who are telling me about systems that they only use for internal purposes, I explain to them, look, you may not be able to claim it if it falls within this exclusion rule, right?
Can you share a success story where a company benefited significantly from the R&D tax incentives, where leading to innovation and growth of the company? You gave an awesome example with Qantas, and I can visualize myself taking the luggage into the conveyor belt and get it scanned automatically. Can you tell us another success story where you were involved in the process of claiming R&D and that business went on to bigger and better things, and it was the core R&D tax incentive that got it going and in the end built this amazing product that the community loved?
I did work with a company just a couple of years ago now, and they were building your electric scooter that you see out on the street. And obviously, there's a lot of fierce competition from overseas manufacturers that flood the market with cheaper products. And these guys were really applying some very advanced engineering principles to build a superior design in terms of the folding mechanism, the light, the energy efficiency, and the safety of it all, right? And we put together an R&D claim, and I even actually helped them to get a overseas activity registered and claimed and approved for them as well. So what they had to do is they had to perform some testing of electromagnetic motors that they were using. And the testing had to be done overseas because the testing facilities weren't available in Australia. So they had to go overseas. And what that means is you have to go through this quite detailed, rigorous assessment process with the regulators where they effectively audit the claim and they drill down very, very deep. But for these guys, it just made a huge difference because it meant that they were almost able to double their claim, right? So I helped them go through the process and we were successful. And what it basically meant is that they were able to claim much more for a number of years following the application. And the reason why that was important is because this was at a time where it was still tail end of COVID, but during the time, there were problems with supply of materials into the country, and especially certain metals of materials that they were using to construct the frame of the scooter and some of the components. The prices were really going up. And it was really through the R&D refunds that they were able to keep the business going and offset some of those increased costs.
And where is that company now?
Still in the market.
So have they finished R&D and are they selling the product?
They are in a state of waiting.
Yeah, it's a tough market, isn't it? Yeah. What are some of the common misconceptions businesses have about R&D tax incentive, and how do you address them? What are the things that people ask you and you're like, oh, I've heard this again, they've got it wrong. What is that?
For me, it sort of falls into a couple of different brackets. So one of them is the ones that believe everything is R&D. They take a very loose interpretation of saying, oh yeah, new and innovative and experimental is everything we do. Everything is R&D, right?
Well, at 43.5%, of course they're going to say everything's R&D.
Absolutely. So they're trying to sell it to me, right? Then on the other flip side is where I'm trying to sell it to clients. It's to say, look, what you do here is genuinely good work. You're doing everything that we can align it with the eligibility requirements. You're documenting it. It's good. A lot of the time this happens with established businesses, but they've never claimed R&D. And they're like, well, we've just been doing this, right, for years and years and years. Why are you now telling us? What I call sometimes a bit more hesitant. But for both of those groups, basically what I then do is I go back to sort of first principles. Let's go back to the eligibility framework and let's have a look at the rules, the generation of new technical knowledge. Do you have some activities where the outcome is not known at the start, where you need to test different approaches? And have you got like a structured method to propose solutions and test those solutions and measure and make certain evaluations, conclusions on them? And have you got documentation to back it up? And if we can find a number of activities that tick those boxes, and if we can help you almost plan going forward to address all those requirements, then you have an R&D claim. So in short, it's around bringing everybody back to those first principles.
What about startups? We talked about startups earlier where they're pre-revenue. Generally, they're founder-led. Could be 2 or 3 founders getting together with an idea. They don't have the money to pay themselves. So the costs could be quite low, but technically it's because they just don't have the money. So what do you do where you've got 3 guys and girls get together? They're probably all worth $200,000-300,000 each. They're engineers and their P&L has bugger all in it, but they're developing this amazing product. How do we get R&D for these guys that technically are putting sweat into the development?
A lot of R&D, a lot of sweat equity, and a lot of effort goes into building products. But ultimately, you can really just claim what's going through your P&L. But the approach that I always take then is, okay, let's put a stake in the ground and let's start educating. Let's start talking about this is how the rules work. This is the type of activities that you can claim. And very often, yep, you guys are doing R&D. Now let's move on to the costs. How would you structure your business or your costs in such a way that you can actually claim it, pay yourselves a salary or engage a contractor? And then you can look at that and document it as well. Keep good records and establish a process and build it out from there, right? It's all about planning and helping them understand the rules and then also the benefits.
Anders, there are obviously some key dates for R&D. I know we're sort of in the midst of that at the moment, so I'm very thankful you joined us today on The Bottom Line. But what are those dates? And if you missed them, are you done?
It's the 30th of April. It's 10 months after the company financial year end, and that's really the D-Day for R&D claims. Look, that's why I'm quite busy at the moment, because I'm talking to a lot of companies and saying, well, you can still make a claim and go all the way back and consider R&D activities and costs going back to July 2023, which is great. So you get to go all the way back there. But time's running out. It's the 30th of April. Look, the registration deadline for the R&D incentive is, technically speaking, 10 months after the company's financial year end. So I do have some clients that have a December year end. I have one that has a January year end. Most of them have your June year end, which is your standard Australian companies. And they have this deadline coming up now at the end of April. Now, can you miss it? Is there a process to still recover from it? Yes, you can put an extension request. And I've done that previously as well. I did it last year with another client, helped him to get an extension. Is it recommended? Absolutely not. Because obviously putting in an extension request basically puts you on the radar, basically means the regulators are going to look extra careful.
And we use the word company a lot in our conversation today. We just want to be clear, right? If you're structured in a sole practitioner, as a sole trader or a trust, are you eligible or is it only for companies?
It's only incorporated entities. And that's also important, especially when companies first set up. I talk a lot to companies, and sometimes they are established businesses, family businesses that have been just operating as a trust. They're doing R&D, they're spending good money, they're developing innovative products. Everything is there to allow them to claim, but that first part of the company eligibility is not there, right? And that's when we have conversations about, if you're setting up a new company, if you want to consider claiming R&D, then you should have an incorporated entity. If you already have an existing company structure in place where you're operating through a trust, you might want to consider restructuring that. It might have other benefits as well.
We're running out of time, but I've got so many more quick questions for you. Audits. So there's 12,000 companies that are doing R&D. Oz industry, like probably all government organisations, probably resources are not of an abundance. What are the audit activities? How does the audits work? And what records do taxpayers need to keep? And for how long to administer an audit that's been conducted?
It's an important question. It's sometimes or very often a bit the elephant in the room, right? Because so far we talked about, the greatness of the program, how applicable it is. The benefits are awesome. You can claim it year on year. It's got a very low barrier to entry, which is why it's so popular and which is why it's so important for the economy to be there. But then there is also adherence with the rules and the fact that the regulators are out there and should be policing the program. Typically what happens in an audit process is that the regulators will come out and they will seek to talk directly to the client. And as an advisor, very often I'm there to sort of mediate or support the client. But ultimately, in most circumstances, they really just want to go out there and better understand the R&D activities, how they're being undertaken, clarify some questions if there is some misunderstandings, and they will also ask for supporting documentation. So number one, there will be meetings, like face-to-face meetings very often, and I've been in my fair share of them over the years as well. And you come across all sorts of assessors, Sivan, right? You come across the ones that are a little bit more on the non-believer side and more on the skeptic side. You come across some that are super collaborative and say, we're here to help. And I think in general, the approach of the regulators is shifting to be more supportive of businesses. They know it's important for businesses. They just want to make sure that they understand the rules properly and that they apply the rules properly.
And the regulators, is that the ATO in conjunction with Oz Industry, or is it both at any point in time?
Earlier on in my career, so we probably going back, let's say 5 to 7 years, or probably more than maybe 10 years, it was common that the regulators would perform reviews and audits almost in isolation. And it could be really frustrating, both for companies, but also the advisors, right? And everybody else in between. They are meant to move to a more collaborative model where they come out and they work more conjunctively with the client in terms of helping them, right?
And what's the future outlook for R&D tax incentives? We're probably going to go to an election in the coming months in Australia. Is R&D tax incentives, is there any outlook in terms of policy changes or anything like that on the horizon?
I can't see that there is going to be any substantial change to the program. Like I said, it's been around since 1986. It's been around for a long time, and it's gone in many ups and downs in terms of adjusting the rules and adjusting the guidance materials and all this sort of stuff. But what does happen is the cost of the program also goes up and down. And what, at least in my, 15, 16 years career now, what I have observed is there is a pendulum, and the pendulum swings in terms of the cost of the program. And when the cost of the program exceeds the budgeted cost, what we sometimes tend to see is an increased activity in review activity, which is probably normal. We expect it. We need to anticipate it. In around 2015, 2017, that pendulum swung towards the program being quite expensive, and regulator activity started to increase. We then saw that come down again during the COVID years and towards the end of COVID. But now we are sort of getting to a point again where the program is getting quite expensive. So maybe now is a good time to actually brush up on your process and make sure that when you're climbing, or if you're planning to climb,
make sure you've got your ducks in order. What advice would you give to business leaders considering leveraging the R&D tax incentive for their companies?
At the very least, have a conversation about it and understand, be aware of the program and understand its benefits, understand the risks. I mean, we talked about the audits, be aware of what that looks like, right? But educate yourself about the program. Don't be ignorant to it. I always say, more than 10,000 businesses claim this every year. Your competitors are out there benefiting from it as well. At the very least, let's have a chat about it. Then make a decision, right? But also, if you are looking to claim it, talk to a specialist, but also make it a priority within the business of saying, this is a really good program that's going to help the business. We need to take it serious. What does that mean? Make sure that we have the right documentation in place. Make sure that we dedicate our team's availability to talk to the R&D advisor and let them ask all his silly questions about what was hard and what was new and all these kind of things, right? Because the more you do this, the more you have this process and actually follow it, the more you protect yourself. I always say to my clients, you know what? With audits, it's important to know that they are there, and one day you may be audited, right? But if we put in place a solid process and we follow that, and if we also improve that continuously, we've got nothing to worry about. And that's basically what I'm trying to instill, and that's the key message, really.
Anders, your consultancy is 100% dedicated to R&D and a few other little things as well. Do companies need to seek expertise like yourself? For how many of the 10,000, 12,000 actually seek advice from people like yourself?
I don't have a number in terms of how many companies out there will use an advisor and how many will do it themselves. But most companies that I contact or who I get put in contact with will already have an advisor. There are some that do it themselves. I think the key challenge to doing DIY R&D claims is that the program is quite complex. There is uncertainty that comes with it, like audit requirements. And the rules do change, and the interpretation of the rules also change. So in a nutshell, there is a lot of change in the program that people need to keep abreast of and need to stay up to date of, right? And that's often why I said, if you go to a specialist, the specialist will do only that. They will keep themselves up to date with the program, how the rules evolve, and will make sure that we don't just churn over R&D claims year on year on year the same way we did it last year, but always take into consideration about What are we seeing? How the regulators are assessing certain activities, be it software? What do they think about AI, for example, right? There's just been some new guidance material from our industry that has come out on AI, which is highly relevant, right? A couple of years ago, there was a tax ruling around at-risk provisions, which is another one of these really dangerous stumbling blocks, right? And if companies are not aware of this, they can really burn you later down the tracks.
Obviously, there's businesses in all industries that are eligible, so it's not specific to one. But what are some of the common ones that our listeners might be within that industry bracket should maybe prick their ears and go, hold on, I'm in that industry and let's thinking about it. So what are those more prominent industries that leverage the R&D tax incentives?
Maybe I'll answer it from the perspective of what are the types of subject matter of projects that are being applied for, because as an example, Qantas Airways that's an airline, but the majority of the projects that they're claiming for R&D, or at least when I was in the account, was software, IT related, right? So the majority, and I'm talking about 50% plus, and it might even be more now, maybe we're even getting towards 60% or more, but the lion's share of R&D claims that are being put in are for software projects, so software and IT. And it's also interesting because these are very often the type of companies, software startups, that are also highly aware of the R&D tax incentive. Then there are some industries like manufacturing, engineering, where it applies to as well. Sometimes there is a little bit of less awareness about the R&D program, but they also claim the R&D tax incentive. And then obviously there is biomedical research. So there are some companies, biomed, biotech, life sciences, that are doing R&D in the sense that it aligns extremely well with the program. And they are sort of the more obvious ones.
My last question is, what are the things that are out there that you read, see on social media, or here in the industry, and you just put your hand on your head and go, geez, what is going on with this advice or the misconceptions that are out there? What are the things that you see in the industry that you just go, I wish I could just grab the person out of the phone and tell them that's not how it works? Are you seeing any activity in that space being so lucrative? Are there any spruikers out there? Are there any cowboys that are playing in the market? What are some of the things that are happening that you see that you just wish you could just get your hands on and just tell them to not do it anymore?
I guess everybody in my profession has their approach of, we all need to advertise and market our services, right? And we need to build a brand in terms of how we want to be perceived, right? And I do see that there is a broad range and a spectrum on how that works. Everything from, here's free money, go get it and I'll get it for you, to maybe the other side of the spectrum. But the way I want to see myself, or the way I at least talk to clients, is to say, look, it's probably a little bit more on the sort of, not conservative, but basically say there is a rules framework here. And the key job is to make sure that we continuously try our best and evolve to adhere to that rules framework and put in place a process and then build discipline to follow that process, to stick with that. And if we do that the right way, if we continuously try to process a governance process and follow that process, the benefits, that money that all the sort of more optimistically marketing people over here spoke about, they will come as a consequence of that. So the benefits will come, but let's not lose sight of what is really important to actually get the benefits, and then to say you don't want to just get the benefits, you want to protect the benefits as well. You don't want to have to pay them back later.
Anders, thank you so much for joining me on The Bottom Line. Your first podcast, you did an amazing job. We love working with you. We've got some exciting announcements coming up in our collaboration with you and your company. So stay tuned for that. But again, I want to say thank you for your time, especially coming up to the 30th of April deadline.
Thanks, Ivan. Thanks for having me.
This is The Bottom Line, a show designed to help Australian businesses succeed. This podcast was produced by accountancy firm Alexander Spencer. At Alexander Spencer, we've been helping business owners realise their goals since 1952, and we play a pivotal role in developing, implementing, and supervising the business goals and strategies of our clients. To find out how we can help your business succeed, head to our website, alexanderspencer.com.au. To make sure you don't miss an episode of The Bottom Line, be sure to subscribe to or follow the show in your podcast app. And while you're there, leave us a 5-star review. It really helps others find the show. I'm Savan Tuna, and we'll be back next episode with more tips to help you transform your business. And that's the bottom line.